The spirit of innovation is deeply ingrained in America, and Google is helping Americans innovate in ways both big and small. Central Texas Regional Mobility Authority is using Google AI to create smarter tolling systems and improve traffic flow for Texans. This is a new era of American innovation. Find out more at g.co/American Innovation.
Reality radio for a really great future. We're talking real money.
All right, you young whippersnappers, you're making us old people look bad. Yes, indeed you are, and I'm talking to you, Gen Z, whatever the heck that means. Yep, you're out saving for retirement. The boomers, and that's me, they're millennials. I guess them's my kids. Gen Z, I don't know who you belong to. You're not even my grandkids. Dang it. Good for you, Gen Z. Turns out, according to a recent article where was it? Was it? I don't have the article in front of me. Was it the New York Times or the Wall Street Journal? I think it was the New York Times. Gen Z is actually putting away more money than previous generations for retirement. It turns out you're better investors. Congratulations. However, there's a qualifier. There's an asterisk. Because Gen Z is the first generation to have 401k participation forced on them. Kind of forced. Because now, since 2022, new 401ks are opt-out rather than opt-in. For the entire history of defined contribution plans, 401ks, 403bs, the rule was you had to sign up for it. Now, the new rule for newer plans is that you sign up automatically. You are signed up, and you get 3% of your pay put into the 401k automatically unless you opt out. And then that goes up like 1% per year, I believe, until it gets to 15%. So you are forced to be better savers. And folks, that is a really, really good thing. Because had I been forced to save as a young man, I guarantee you I'd have far more money than I have now. I mean, I'm not uncomfortable, but I would have had more. And the other thing is that Gen Z is better financially educated. Well, I got to qualify that too. Gen Z has worked to gather more information. They're just not doing really well with that information. About half of Gen Z adults have had access to financial education classes, and that's more than anybody before. And about 30% have actually enrolled in personal finance classes, and that millennials are only at 20% and boomers are at 7%. That's according to Wallet Hub. And in college, 50% of college students are using financial literacy programs now, so they're learning more about it. However, it's interesting, a study by TIA, the insurance company, found that Gen Z actually, despite the fact of taking more courses, had lower financial literacy. And I think that may be due to the fact that their sources of information are not good. You know for a fact where Gen Z is getting, I don't even have to tell you, you know where Gen Z is getting most of its investing and financial information, right? Where? Social media. In fact, there's even a name for it. It's called FinTok, as in TikTok. Millennials and baby boomers don't get much information from FinTok. Gen Z, much more information. And So they're exposed to a lot of information, but most of that information is really horrible. If you watch the financial advice given by these youngsters on FinTok, I'm sorry, they don't have wisdom. They may have ideas, but they don't have wisdom. They're given lots of information out, but according to Investopedia, over 70% of the investment tips that FinTok, the social media people, provide is either missing important information or flat out misleading. And this is wrong. 855-935-TALK is our phone number. Give me a call.
Tom and Don are talking real money.
Do you suffer from financial flinch reflex? Hi, I'm Don McDonald, and financial flinch reflex, or FFR, is a widespread condition triggered by watching too much financial news and not having a solid retirement plan. Common symptoms include doom scrolling, yelling at your portfolio, and considering gold bars, crypto, or your brother-in-law's startup. Markets don't cause panic. Not having a plan for them does. The best treatment? A real financial plan, one that's based on your life, not the latest headlines. And yes, we're talking to you, future retiree. Start your financial calming regimen today with a free, no-pressure meeting with an Appella advisor at TalkingRealMoney.com or call 800-386-3004. That's TalkingRealMoney.com, because a plan is the antidote to panic. Side effects of planning may include peace of mind, smarter investing, and fewer late-night CNBC binges. Please plan responsibly. Appella is an SEC-registered investment advisor. See AppellaWealth.com or the firm's Form ADV for more details.
Your guides to a really great financial future. Tom and Don are talking real money.
Hey, welcome back to the show. I'm Don. I think I neglected to mention that earlier. I'm Don McDonald. Tom Cock is in Europe. So give me a call, 855-935-TALK, 855-935-8255. And wow, I am having allergy issues, so I have to hit my mic button. Oh, the allergies are always a problem this time of year in Florida, which is where I hang out doing the show. So, but give me a call. Spend some time with me. Let's talk about your money. I want to help you get your financial situation right, because it's not as hard as you think, even though there's a ton of bad information out there, particularly information geared toward the latest generation of investors, and that's Gen Z. The newest generation, my grandkids, they're Gen Alpha, I think is what they're calling that one. But the Gen Z was the one before that. And Gen Z spends, of course, a lot of time online. Millennials and baby boomers do too. I can't get my wife's phone out of her hands. They are looking for good information, and good for them. The problem is most of it isn't going to be found. Very little of it is going to be found on social media. Most of the advice on social media, according to some studies, is really bad. It's missing a lot of information, or it's an outright scam. It's even illegal. There was one last year where a bunch of finfluencers, FinTalkers, whatever they are, we're suggesting that if you were a Chase Bank customer, you could take advantage of a glitch in their system. Did you know there's a glitch in Chase's system? Yeah, you could deposit a check that didn't have enough money to actually cover it, and you could take that money out of Chase banks through their ATMs, somehow implying that this wasn't fraud, which it was. I mean, if you deposit a bad check and then take money against that check, you've stolen money. I don't know how people missed that was stolen money, but apparently a lot of people did it. And there is always something out there for advice for those who don't want to work hard, who don't want to take risk, who are looking for high returns with no risk. Examples. There's still a ton of people online who are pushing things like these bank on yourself systems. These are terrible. They're just life insurance, overpriced life insurance. And they're saying you can borrow against it tax-free. Yeah, but it's not free money. It's just borrowed. Got to pay it back eventually, or it comes out of your principal. There's nothing free. By the way, there was a study by Credit Karma that showed that of Gen Z social media investment followers, 37% ended up getting audited by the IRS, and 25% were flat out scammed, ripped off. So while they may be saving more, they need to be learning better, as we all do. And if you are in a situation where you think you might be tempted to follow some sort of advice you're getting online, and I know there aren't a lot of you Gen Z folks listening, but there are some of you. If you have a friend who's talking to you about one of these, have the friend call. You call 855-935-TALK, 855-935-8255, and I promise you that if I believe it's legitimate, I will tell you so. But if I believe it's not, I will forcefully try, not violently, but strongly try to dissuade you or them. 855-935-8255. Got a whole hour to talk about money with you here on Talking Real Money. And Dennis, you're up next. Welcome to Talking Real Money.
Hi, good afternoon. I have a 35-year-old granddaughter, and my wife and I have been funding her IRA to be sure it's fully funded each year. Mm-hmm. And we only have her, or we've had her in VOO the whole time. And my question to you is, would it be better to put some of the money in one of the other Vanguard funds that's more aggressive, like VITAK, the Infotech one?
No, don't
VOOG?
do that. No, do not do that. We do not do sector funds, ever. Ever.
Okay.
Because you're betting on one segment of the economy, and even though it has done well, we don't know that it will do well. That's too aggressive. I might suggest you look at a combination of, well, like VT for the bulk of the money, and then the I'm trying to remember the symbol for the small Vanguard small cap value. I have to look it up now because I'm having a senior moment. Small cap value index ETF small cap. Come on, Don, learn to type. Small cap value ETF is VBR. I couldn't remember the symbol. Do a combination of VT and VBR if you want to be more aggressive, or even just do VBR if you want to go hog wild, crazy aggressive, but don't just do Infotech.
Okay, and the other one was VOOG, that's more of a little bit more aggressive.
No.
I noticed they all, no?
No, VOOG is, you're still dealing with the S&P 500. You're just dealing with the growth part of it, which we think is a mistake because historically it's the value portion of the index that has posted longer term higher returns historically.
So if we just keep her in VOO, that'd be great.
VOO is better than VOOG. VOO is better than the Infotech fund. I believe that VT and VBR would do better longer term in terms of returns, but they will be, they won't necessarily even be more volatile. Might be similarly volatile, but for me, a better portfolio. I'd rather see her with VT alone or with VT and VBR.
Okay, thank you very much for your opinion.
You're very welcome. Thanks for the call, Dennis. Take care. 855-935-8255 is our phone number, 855-935-TALK. And let me explain a little bit why. VOOG the Vanguard S&P 500 Growth Index. That's the growth stock portion of the S&P 500. That portion of the market has, over the past many years, outperformed VOO. It's done a lot better because that's where all the big growth stocks, the Apples and the Nvidias and the Magnificent Seven stocks are focused. They're not generally value stocks. They have been at times, and when they were, they made people very good money too. But the fact is that there have come times in the past when the growth portion of the index has performed badly. And why would you want to focus all of your investments on the part that has recently done the best? Don't you want to be in the portion of the market that has historically done better, but recently is a better bargain? This is why I hate following performance. You've got to avoid trying to follow what has been hot, because it may in the future not.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
Welcome back to the show. I'm Don. Tom is on vacation. He's actually in France. He should be back in Paris by now, but he went to Normandy today, and then I think he's going to Paris, Disneyland, I think. I don't know. His family is. I don't know what he's going to do. He does different things. 855-935-TALK is the phone number here. That's 855-935-8255. Give me a call. It's free. It's really easy. And it's kind of important because this is about your life, your future, your family's future, and living it better by not messing up financially, which can destroy your life. 855-935-8255. Let's go to Linwood, Washington. Ted, welcome to the show.
Thank you.
Thanks for calling. What's up?
Well, I have money coming in from the sale of Nordstrom stock, and I'm trying to figure out what am I going to do with this. It'll probably be in the $20,000 to $25,000 range.
Well, what's this? Where this is coming from? What kind of an account? Just a regular brokerage account?
No, we both worked for Nordstrom.
Oh,
and
okay.
Received as incentives for doing well.
It's money coming from your employment at Nordstrom. It's not money coming from Nordstrom stock. I misunderstood. Sorry.
No. We were given Nordstrom stock as rewards for doing well in our sales with the company.
Got it. So now you're selling the stock.
The deposit box.
Okay.
And we had to send it in to them.
Okay.
And now we're waiting to see how much they're going to send back.
Got it. So this is going to become part. What will be the need for this money? What are you going to want it to do for you?
Well, we haven't really decided, but we're thinking maybe we should get some, since we're older people, we should get some burial plots.
That's a terrible investment. But I guess you got to think about that. So if you don't have them already and you know where you want to go, it may not be a terrible idea to make sure you have a place to spend however long after. That's one of those things. I'm older too, and I'm going like, just cremate me. But if you want to get them, absolutely. But my goal is to try to determine what this money would do best for you before you decide where to put it. Windfalls should be part of an overall portfolio. So do you have an overall investment plan for your money as it is right now? Well,
we're both in our 80s, so I mean we've done a lot of planning beforehand.
Okay, so you don't need any. You don't need this 25,000. Not.
There's no emergency that we'd need it for right now.
Okay, might it be needed for some purpose in the future?
Well, I don't think so. We've got investments in two different investment firms, and total is probably around $800,000-$900,000.
Okay.
So, we take some out of one of those accounts on a monthly basis.
What happens if one or both of you should need long-term care?
We're in trouble.
Got it. I wouldn't buy a burial plot. I would put it in my emergency money. I would keep it available in case of that, because the farther you get into your 80s, as you're aware, the more possibilities there are of some care being necessary. And given that you have, and I'm going to say only, it's still a lot, but $800,000 can, with medical care, be drawn down very quickly. And if something were to happen to one of you where you were in the long-term care for up 2 or 3, 4 years, that's going to reduce the income the other one can draw in retirement, which could make that $25,000 a much more important component.
Well, should we look at things like CDs?
You could. Yeah, I wouldn't go really long term, but if you've got other liquidity, I could see putting that in a CD for a couple of years at a little over 4% these days. Shop around, though, for the best rates. Go online and look for the highest CD rates, but I'd keep it around.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
Hey there, welcome back to the show. I'm Don McDonald, Tom Cock on vacation. Thank you for being there. Thank you for being a part of the show. Thank you for listening and telling friends and listening to our podcast, which we do almost every day of the week on weekdays. And thanks for calling 855-935-TALK, 855-935-8255. A lot of time remains. And let's go up to Vancouver, British Columbia. Sletch, welcome to the show.
Hey, Don, how you doing?
I'm doing well, sir. Thanks for the call.
Okay, so the question is, what's your opinion, or what do you think the outcome could be, gazing into your crystal ball, of the BP Shell merger potential?
Hold on, let me find the crystal ball. Where did I put that? It was on the blank, so
it's probably under the seat.
I think I sent it off to the shop to be repaired. Yeah, but okay. I'm terrible at predicting the future. Shell has said that it is not trying to buy BP, which
correct
invokes a UK takeover rule, which means they can't make a bid for them for the next 6 months.
I read that.
So,
yes.
It probably means there's not a lot of fire to the smoke, at least at this juncture. The other thing is this merger would be massive. It's like on the ExxonMobil scale. Massive.
Yes.
And there are very few companies in the world that have the cash flow and the market value and the assets to pull off an acquisition of this size, and therefore the excitement that is being generated in BP stock, I think, is misplaced. Because basically it's saying, oh, BP's in play. Well, who else could play for it? I mean, Apple's not going to buy it. Yeah, it's a really short list. You're not going to see anybody in any other part of any industry except energy considering a bid for BP, other than Shell. ExxonMobil couldn't do it. They wouldn't be allowed. And the others are just too small.
Well, ExxonMobil is probably still digesting their merger.
Plus they would run into so many regulatory problems and I don't think they are even interested. But I'm guessing.
Yeah, they're still digesting.
Yeah, I'm not in the business, but I just don't see this as something. I see this as a trial balloon somebody floated somewhere. And certainly
It's kind of like the canary in the mine shaft.
Yeah, it's not a canary yet. It's not dead. You know, I just don't see. And if it was, let's assume for a second that it did happen. Well, it's already now partially built into BP, so there's not a play for anybody in this.
Yeah.
There's just not. I can think of a whole lot better things to do with my money than buy BP stock.
Well, I had been sitting on BP stock for a while.
Okay.
So it was like...
Well, then this 7% bump should be like music to your ears. It's an opportunity to start getting out of stock, individual stock, and getting more diversified.
Like I said, it was part of an inheritance, and I just kind of sat on it and thought about it once in a while. But then this all came to light in the media and whatever, and I said, "Oh, could this be good?" And
I think you've seen the good.
The thing came out the other day.
I think you've seen the good, because remember, there's another part of this that I don't think anybody's really mentioned, or it hasn't been mentioned much. Over and above the massive value, what is it, 200 billion? That's a lot of money to come up with. The UK is not going to be excited about selling their prize crown jewel corporate-wise to a Dutch company.
Yeah, I see the politics on that.
Oh, there's some big politics there. So, we're not big fans of individual stocks. If you have them and you want them to probably work harder for you, somebody just handed you an opportunity.
Well, I appreciate you taking my call.
Always my pleasure. Thanks, Sletch, for the call. 855-935-TALK is our phone number, 855-935-8255. Give me a call. I'd love to help you deal with some of this stuff. And if you do own individual stocks, you have to remember that they're standing alone. They can be very dangerous, even if they're giants like BP. So get rid of them.
Tom and Don are talking real money.
Do you suffer from financial flinch reflex? Hi, I'm Don McDonald, and financial flinch reflex, or FFR, is a widespread condition triggered by watching too much financial news and not having a solid retirement plan. Common symptoms include doom scrolling, yelling at your portfolio, and considering gold bars, crypto, or your brother-in-law's startup. Markets don't cause panic. Not having a plan for them does. The best treatment? A real financial plan. One that's based on your life, not the latest headlines. And yes, we're talking to you, future retiree. Start your financial calming regimen today with a free, no-pressure meeting with an Appella advisor at TalkingRealMoney.com or call 800-386-3004. That's TalkingRealMoney.com, because a plan is the antidote to panic. Side effects of planning may include peace of mind, smarter investing, and fewer late-night CNBC binges. Please plan responsibly. Appella is an SEC-registered investment advisor. See AppellaWealth.com or the firm's Form ADV for more detail.
Your guides to a really great financial future. Tom and Don are talking real money.
All right, I need to make a broad, qualifying, disclaimer-like statement, because sometimes the information comes very quickly here. Sometimes we're butting up against breaks and can't finish the complete qualified thought. But let me tell you, when it comes to getting rid of individual stocks, or when it comes to, like we spoke about in the last hour or last show, converting a regular IRA to a Roth, always make sure that this is part of a plan. It needs to be part of your plan. If you're converting a regular IRA to a Roth, you want to make sure you don't kick yourself into a higher tax bracket, because then the benefit is going to be diminished dramatically, because you would have been in a lower tax bracket in the future when you took the money out and just spent it. If you're selling individual stocks, make sure you don't hurt yourself from a tax standpoint. and then get that invested properly to maintain its positioning in the portfolio if you had an allocation plan to begin with. And you should have a plan that is ongoing anyway. Everybody should have one. 855-935-TALK is our phone number, 855-935-8255. And by the way, your plan should avoid getting involved in things that are out of your area of expertise. I'll give you an example. There's a great story going on right now. And I have to tell you, when I read it, I went, oh, well, maybe I should do this. And then I went, Don, of course you're not going to do this. You don't do this stuff. But I can see why people get tempted to do it. There is a company, I think it's now just called Strategy, but it was called MicroStrategy, and it used to be primarily a software company run by a guy named Michael Saylor. Well, Michael Saylor is a crypto-crazed bull. And basically, he has bet the company on Bitcoin. He has actually borrowed money to buy Bitcoin that is now worth about $65 billion. While his company, MicroStrategy, and their business, well, they're not making any money. I mean, they got operating revenue, but after expenses, the expenses of acquiring Bitcoin and everything, the company loses money. They don't have an earnings number to have a price earnings multiple. So how do you value their stock? Well, many would say you value the stock based on the asset value of the company. Now, could you conceivably sell off the software business? Yeah, but you wouldn't get a lot for it because it's a depreciating asset now. They're losing subscribers. They're up against a lot of competition, and they're not really putting any money into that part of the company. So it's basically worth a little more than its Bitcoin value, which is about $65 billion. However, the company is trading for the equivalent, for about $107 billion, or about 40% more than the value of its Bitcoin, $108 billion, right around there. Huge, huge premium. So what are you getting for that premium? You're buying Bitcoin at 40% more than you could buy Bitcoin, basically, right? That's why one of the big short sellers in the world, a guy by the name of John Chanos, who was one of the first people to sell stock he didn't own in Enron because he was pretty confident it was going to go away, and he got rich shorting Enron. Well, now he's shorting MicroStrategy or Strategy. And this one seems so obvious that it almost seems tempting to do, but don't do it. Because short selling can be dangerous. If you get squeezed, you have to come up with money to cover your position, the stock that you have to borrow to sell it. You have to borrow and pay interest on stock you don't own to sell it short. So it's really dangerous. It has like an open-ended downside. And even playing options, dangerous, because options are short term. And if you don't bet not only you have to bet the right direction, but you have to bet the right time frame. All of these things are gambling. If you're not a gambler, this is the kind of stuff you shouldn't be doing. But it's a fascinating story to watch. 855-935-TALK is our phone number. Let's go to Tumwater and Julianne. Welcome to the program.
Hi, thank you.
Thank you.
Yeah, my question is, I'm divorced, and I put 3 boys through college, paid cash. I work in the IT sector. I'm at the director level. I have good bonuses, but I don't have a lot of money saved. Most recently, I finally got my VA disability, and from my ex-husband, I'm getting railroad retirement. So about $5,000 a month that I don't need to use. And I'm wondering how to invest this for my future because I'm 59.
Okay.
And I want like the best bang for the buck is for an investment. Like I get the disability as long as they're still going to pay disability, that is going to be for the rest of my life. But
well, let's count on
what
that.
do I do with
Let's
this money?
count on that because the rest is political. Let's just figure that these are obligations that the government made. Just like Social Security is an obligation the government has to retirees, they have this obligation to veterans. So let's assume that will continue. You've got the other money, you got the railroad. So these are lifelong things which you can then, when you get to retirement, you can use those to live on. In the interim,
right.
In the interim, there are two ways to go with this that I think make sense. Do you participate in a 401k at work?
Yeah, I do have a 401k at work. I don't touch it. I have some stocks from some of the places that I've worked before. Like I have Microsoft stock, I have United Healthcare stock. They're all tech stocks, really, and they're just sitting there. But you know that market goes up and down. But over time, I'm hoping that there's like a stable amount that I can count on. I don't know what to do with that either. I just, I get employee stock every year.
Okay, let me ask you an important question because we don't have a lot of time. In the 401k, are you maxing that out?
No. I just finished paying for the last person's college, last boy college.
All right.
So
it's time
I bought a house as well.
It's time to max the 401k. Max that.
Okay.
I assume you're getting a match of some sort, right?
Yeah, it's pretty low, only 3%.
That's okay. It's free money. So
exactly.
Max that out. Take it to, let's see, you're at 30,000 now that you can put into that thing. Yeah, you're at 31,000 you can put into that. So I would definitely get to that as quickly as possible. Then over and above that, I would probably put anything else in a Roth IRA. And of course, I would suggest you put it in a very diversified portfolio of stocks and bonds. I would suggest you go to talkingrealmoney.com, take our risk quiz so you know what that proportion should probably be, and then do that through somebody like Vanguard or Schwab.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
And before we run out of time, let's sneak one more call in. Let's go to Shelton and Alan. Thanks for the call. Welcome to the show.
How are you?
I'm doing well. Thanks for calling. What can I do for you, sir?
Good. I've been one of your customers for several years now, and I've just been kind of trying to figure out what to do. I've got a bunch of gold and silver, and that I bought back in the 80s when they first started selling gold, the government.
Wow.
That's like 82. Yeah, I'm old. Yeah, like 82. And so I've got this. I'm trying to figure out what I kind of looked online, but I'm not sure how much I can sell without paying taxes.
You
am I going to pay capital gains on all of it?
Without paying tax of some kind.
Okay.
No, you're going to get hit with a capital gains tax. It's capital gains, though.
Yeah, I mean, but I didn't keep receipts on what I paid in the 80s.
Oh,
so I don't know how to sell it.
That's okay. I can help you with that. Do you know approximately when you bought it?
Whenever the government started selling gold coins, I think in 82.
So did you buy it all in one fell swoop, or did you buy it over time?
No, bought it over time.
Okay. What you're going to want to do is you are allowed to recreate the cost basis of your gold or your stock or whatever it might be. What you're going to want to do is go back on calendars, look back at those years, and roughly come up with the approximate times when you think you bought what amount of gold, roughly. And then what you use, if you say, okay, I can pin it down to this week or this month. Let's say it was in April of 83 or April of 82. I bought about half of my gold. Well, what you can do then is find the highest, not the highest, I'm sorry, find the lowest price in April of 82. And that you write down as your cost basis. As long as you are conservative, as long as you err on the side of the government, you're allowed to recreate your cost basis.
Okay.
And that's easy to do. You can go online and pull up stock charts for the last 100 years without any issue. Heck, you can even use somebody like ChatGPT and say, what was the lowest price in April of 83 for gold? And it'll give it to you.
Okay. Yeah. Okay. That sounds good. I had a friend that he's now gone, but he stored a lot of gold for his wife, and he said he could sell 3 coins a month without paying any taxes.
That's a lie. That is not true.
I wasn't sure.
That is not true.
The
IRS,
unless you know the right.
No, the IRS does
unless
not.
You know the right gold dealer.
Yeah, but it's still you're committing tax fraud if you don't pay taxes on it.
No, okay. That's what I was just trying to figure out.
Yeah, so
it was very confusing.
To go ahead, it's better to declare it because you've made a lot of money. So I just don't have a problem paying taxes when I've made a lot of money. And there's a way to do it easily. So go back and recreate that price, and you're good. And thank you so much for the call, and thanks to all of you for being a part of the program. Tom will be back with me next weekend. And please, if you need anything, just go visit us at talkingrealmoney.com.
The opinions and views expressed in this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions.
Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy.
Information presented on the podcast is not personalized investment advice from Appellate Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appellate Wealth, a fee-only registered investment advisor.
Please see Appellate Wealth's ADV Part 2A on our website for information regarding Appellate's fees and services.
Appellate Capital, LLC, DBA Appellate Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appellate does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. I think I need a nap.